Hello guys, welcome to the stock trading session. Hopefully obvious what we'll be covering. We'll be covering stock trades and looking at new opportunities. Now before we start, the disclaimers are in the top left-hand corner, so please read them, even if you need to pause the video to do so. Now, those of you that are with me live, if you have questions, please let me know. I will keep an eye on the chat box. If you want me to look at particular stocks, send me to go and look at them. If you want me to change timeframes, I'll do that. I will stop whatever I'm doing to make sure that we answer your questions and make the most out of you guys that are here live, because these sessions are for you. These sessions are for you guys to get the most out of. And so if I'm explaining something that doesn't make sense, let me know, stop me, and I will rephrase. If you want to look at particular stocks because those are the stocks you trade and it's most helpful that we look at those, again, you let me know. So I will be guided by you that are here live. For those of you that are watching recorded, if you have questions after the fact, you can email me here at becky@tradewithufos.com. So that's an email address you can use to get hold of me. There's also tradewithufos.com/Becky, which you'll see there on your screen. Now let me bring that up, which is here. This link will take you to this page on the website. From here, you can book one-on-one coaching with me if you'd like to. You can check out apps and courses and coaching and live trading at the start or at the top there. Very soon, this will be filled in very soon, but you can track the trades that I place in the sessions and see how they go and what we did with them. You can scroll down and here you can find monthly and yearly subscriptions for our apps. You'll notice Auto Climate is free in most cases. Auto UFOs, different amounts depending on what you're using or what platform you're using. You can check out our platform. There's also a question and answer section. So lots of help, support, and resources, all from this link, which is tradewithufos.com/Becky. So that's that. So let's go and have a look now at some trades that we placed last time and see what happened. In fact, I've just realized I don't think I have top open just yet. So let me just bring top up because I tend to use top to trade with. So let's just do that there. And then we can use that to find our opportunities, and then we'll come back to TradingView to check them. So we look at trades that we've placed before for two reasons. One, for those that have joined us before and were placing these trades with us or following these trades, then it gives you an idea of what happened with these trades and helps you follow them, gives you the continuity there. What it also does for people where they may be looking at this for the first time, this might be the first time they've ever watched any of our sessions or maybe particularly the stock sessions. What this does is it gives you context as to where we might manage our trades, why we might manage our trades, what we might do before a trade happens or after a trade happens in order to change what we'd already said. Meaning, when are we going to cancel a trade before it happens? When are we going to cancel a trade after it triggers? And what do we do as a result? So here we've got top just loading, but before we do that, let's just come back here to TradingView and we'll have a look at some trades that we placed last time or trades that we still have open. Now, I believe we have a few open that have been around for ages, like months and months that we've got these trades open for. Let's take a look. Brilliant. Let's have a look at these. So we'll start chronologically and we'll have a look at these trades and again let you know how we might manage these trades, again to give you an idea of what we do and why. MW. So PRMW, according to my notes here, we put this on in February. Yeah, 11th of February there. So what are we going to do about this trade? Is there anything to do with this trade? The short answer is no. There's nothing to do here. Let me explain why, again, to give you context for those that might not understand what we're saying. So we placed this trade on the 11th of February. We placed it when we had a thick red dot, probability to the downside. Our EMA was within our UFO. If you don't know what I mean, don't worry, we'll get to that. And we were triggered in the trade. Within a couple of weeks, we hit our safety target, which means the worst that can happen now is we break even. Prices continued to come down, albeit very, very slowly. So for the time being, there's nothing to do because we still have a thick red dot on our auto climate telling us probability is down. We're in an open short position and probability is down, so there's no need to change anything. However, if auto climate changes to a thin dot like this one, or a thick blue dot like this one, then we get out of the trade at market and take it at what would most likely be a small profit. So keep an eye on that, but for the time being, nothing to do here. I believe the same is true for PPBI. Same is true here. So again, I'm just going to squish that down. We got in at this point, again, this was placed back in February. We got in at this point when we had a thick red dot, probability was down, the EMA was within our UFO, we got triggered there. It took a good few weeks to get down to hitting our safety target. We've only got a little way to go before it hits our final target. No reason to get out of it now. We still have probability down, so we'll leave that as it is. Let's now have a look at ones that we've placed more recently. So we have BIAV. So again, I won't change it on the other one because it's less relevant. Same situation here as well. We placed the trade at this point when we had a thick red dot. We had our EMA involved. We hit our safety target after a week or two, still moving down, albeit slowly. If it comes all the way down here, we take our profit or our final target, final profit. More than likely, by the time that happens, we're going to have a change of climate. It will either become a thin dot or a thick blue dot, and that's where we will get out of the trade at market whenever we see that that happens for what will likely be a small profit, but for the time being, nothing to do there. Now we have a few that we placed even more recently, so these were in the last one. So ATVI, we placed this at the start of May. So let's take a look there and see what we might do here. ATVI, brilliant. Okay, so it looks like we will be cancelling this trade, and let me explain why. So we placed the trade, just going to squish it so we can see what we need to see. We placed the trade on the 6th of May, about this time. So we placed the trade when price was about here, expecting that price might return and trigger us into this trade here. Instead, price carried on and came back, but not to our entry, dropped a little bit, came back, but not to our entry. By this point, the EMA price, that blue line, is not within what would be our entry price. So we cancel the trade. These are the reasons, these are the rules that we follow in order to get into a trade. If we don't have those rules lining up, we don't place it. So if those rules change by the time we get into a trade, again, we cancel it and we get out. We don't even start this. So this should be a cancelled trade. Oh, just making a note here. Cancelled trade, no need to have this trade on anymore. Then we have Guild. I've placed a few of these. I don't know why. I have Guild pops up quite a bit. It must fit our criteria quite a lot. So let's have a look at this. This looks like it would have been a losing trade, but let's take a look. So it was 144 on the left there, on the right. So we placed the trade on the 6th of May. Here we go. When we had a thick red dot, probability was down. The EMA was within our entry and stop, so that worked. Now, after that, price moved against us and stopped us out here at this point. At this point, we still had a thick red dot, so we wouldn't actually have cancelled the trade or closed out early. We would have just taken a loss on this trade. So on this trade, it's a loss, a flat loss. We wouldn't have reduced that. We wouldn't have taken any profit. We wouldn't have broken even, just a flat loss on this one. So I'll keep that on for my records later. And then the last one, PDCO, which we actually saw a glimpse of at the start of this session to see where we're at, PDCO. This one is going to end up being a small profit. And again, let me explain why. So we placed the trade on the 6th of May and it entered on the 6th of May at this point. Or the 9th of May, sorry, entered on the 9th of May. So we got in. Oh, in fact, we might not have got into this trade. Let's just have a look what it would have looked like at this time. So when we placed it on the 6th of May, the EMA was just inside where we needed it to be. Here we go. So by the 9th of May, actually, I do think the EMA would have worked out for us just as this point. So the EMA is a moving average. It moves with price. It will move depending on where price moves. It's lagging, of course, like most indicators. So what happened here is that it looks like by close of play, which is what we would have seen then, by close of play on the 9th of May, the EMA wasn't lining up, but price moved up into this area, into our entry and stop between those areas, and price at that point would have likely been in there. The EMA moved down because price moved down quite a bit. But when price was here, the EMA was also likely very close. So we would have entered this trade. Great. So we entered the trade on the 9th of May, and on the 9th of May, we hit our safety target almost immediately. So that then meant we took a little bit of profit. We then had half of our trade taken as profit, the other half still there as risk. So if we make half and then lose half, we would break even. That was the situation we were in. Now, since then, let's play this out. Since then, price moved in our favor, didn't quite hit our final target. Again, moved in our favor, moved against us a little bit, moved again in our favor. But by the end of the week, so if that was the 16th of May, then I guess that was the 20th of May. By the 20th of May, which was here, we would have had a change of climate. So by the 20th of May, we had a thin dot on our auto climate. That means we no longer had probability down. If we no longer have probability down and we're in an open short position, the best thing to do to protect ourselves is get out of that trade. So what that means is, if you'd have looked at it on the 20th of May, you would have closed out of your position at whatever time you saw it, at market. So on the 20th of May, it could have been anywhere between, let's find the low of that, anywhere between 30.72, yeah, pretty much to the high of that. So you would have closed it anywhere between 30.72 to 31.33. So wherever you did it, where it was luckily at the low of the day, unluckily at the high of the day, or randomly in between, you still made a slight profit on this trade. It would have ended up being an overall win of about 1.5 to 1 point something to 1, albeit small, but still a profit. So let's now move on to looking at new opportunities. We want to know what's coming up, what could we be looking for? So just to have a look here, and we'll come to the FX Street economic calendar to help us. We are going to have a look at US news, because we're going to be looking at US stocks. So US news, and we want high impact news. We just want to know about it. We don't care what the news itself is most of the time. You could use that if you like to. But we want to know, when are the scheduled news reports coming out that may affect the trades that we place, the markets that we're looking at. So what we see here is that on Wednesday, we have some news coming out. I don't know what time zone this is in. I think that's probably GMT or BST. So that would be 9 a.m. Eastern time. Will affect, or could affect, we have news that could affect the US markets. Also true on Thursday at what would be 7:15 a.m. And then we have some coming out on Friday as well. So be aware of that we might have some news coming out next week that may move the markets that we're in. That might make you close your trade before that news comes out. It might make you close part of your trade before that news comes out. It might just make you be aware and look in. It's up to you to decide what you do with this information. You could ignore it entirely, but it's there for us to know, okay, we might see some volatility in our trades around this point. And what we do about that is up to us as traders, depending on how strict or not we are, depending on how conservative or risk embracive we are, if that's a word. But just to be aware of that. So now let's come to top and let's have a look at our matrix, which is our scan, and we will look at new trades to place. I'm going to look at stocks and ETFs, US stocks, all US exchanges, We've got a min price and a max price here. This can be changed. You could have no max price. The reason I've put in $150 is because I think when stocks get more than that, I mean, it's a random number to pick, but if a stock is worth $2,000 or $3,000 a share, you need quite a lot of capital in order to ratio that to what your percentage risk is per trade. If it's $2,000 a share, you've got 50 cents worth of risk, and you want to risk, I don't know, $1,000, you're going to need quite a lot of money in order to ration that out so that it works out. So you could have really big funds in your account. I try to be more catering to those that might have less funds in their account or an average amount of funds in their account. Of course, if you're using these scans yourself, just remove that and put whatever you want. Trade stocks that are worth 5-10 grand if you want. For me, I think even if you've got a massive account, and I'm talking millions of dollars that you might have in your account, even so, it's inefficient most of the time to be buying stocks that are many thousands of dollars per share when you could buy more shares of lower price stock and therefore capitalize more on the movement. But we'll see what we come up with here. Again, you can change that as you need. Got a minimum volume of 300,000 a day. And we are looking at, well, actually, before we do that, let's look at the market as a whole. I believe it's still on a downward climate. It is. So the market as a whole, the ES here, which is the futures continuous contract for the S&P, essentially we're looking at a representation of the US stock market. We have a thick red dot on auto climate, meaning probability is down for the market as a whole. So let's have a look. Oh, I have to do that again. Let's have a look at probability down for individual stocks as well. You could still buy stocks. There's no need. I'll put 200 in for that. There's no need to only look for shorts if the market as a whole is going down. But if the market as a whole is going down, it's likely that the individual stocks within it are also going down. So that's what we're looking at. So that's what I've programmed in here, basically. I'm looking for stocks that have probability to the downside. So let's just check that I've got everything okay in there. Doesn't look like we have many opportunities today. So we might be more hopeful and see if that gives us more. Interesting. Okay. Let's have a look again. Oh, sorry, let's confirm down. That's what we were looking at. So let's be sensible, confirm down. My apologies. That makes more sense. I was wondering why we had a small list when the market as a whole is down. It's because I had it clicked to look up. So if the market as a whole is down, understandably, so are many stocks within it. So we're going to look at the stocks within it. We'll go alphabetically and we'll look one by one until we find opportunities. Now, I often take the time to explain why I'm doing what I'm doing, but oftentimes for people that have watched many times, you're just hearing the same thing over and over and over again. Whereas what you really probably are looking for when you come to these sessions is just show me opportunities. So that's what I'm going to do today. For the next sort of half of this session, I'm just going to scan through opportunities. If we find them, we put them on. If we don't, we don't. If you need context to that, watch my previous videos. It should help to give you a little bit more understanding. So let's go. Let's group that and get cracking. So just to give you context, I'm looking at a weekly chart on the left, and I'm going to look at a 144, a 1 day, a 2 day, and a 3 day on the right. Let's just wait for this to load so we see what we need to see. That's loaded. We won't take this trade because that number is too low. On the 144, let's take a look at the daily. Same thing. 2 day might work. It's loaded strangely, but the 2 day might work. We don't see any red UFOs on the 2 day. Oh, that's the 2 minute. That's why. 2 day. Brilliant. Okay, so no trade on this one. The EMA is not lining up. The EMA is lining up for this one, but this number is too low. Let's go back to the 1 day because I think I missed that, and that number is too low there. So the only time frame that gave us a number great enough up here was not lining up with the EMA. So we move on. This is what I want to look at. Get rid of that as well. Okay, ABR. Good if we can place a trade here because we've got sellers on the weekly time frame as well, which is always good to double up there. We've got an opportunity here on the daily already. Let's check through and see if we've got a better opportunity anywhere else based on this number being higher. Doesn't look like it, but let's see. Number's high, but not lining up. So I believe the highest number that lines up is our daily chart. So let's place this trade. So today is the 27th of May. We're looking at ABR. Just writing a log here. Over time, once we start using the one on my link, then I'll do this live with you and show you as I'm typing it and what we're putting in. For the time being, I'm just putting in the numbers to give me reference to when I go and place them. And we'll figure out our target 1 in a minute. Target 2 will be 12.09. So our entry is 16.72. Stop loss 17.33. I've added 10 cents there. Our second target is 12.09, which is this. And we'll figure out our first target in a minute. So let's go and find this. ABR. Looks like we must already been in a trade. Let me just search this here and see if we can find. We're already in a trade from before. Oh, okay, no, we would have cleared that out last time. I just forgot to close it. No problem. Great. Okay, let's look at this again from new. Okay, so we had, and I always say this, I do not use Fibonacci's as they are intended. So apologies to those that do, and you're looking at it going, what are you doing? I use them as a drawing tool. Nothing against Fibonacci's, by the way. I think for a lot of people, they work out. It doesn't happen to be something that I use, but not for any particular reason other than that when I first started learning, I wasn't taught it. I was taught other ways. I've used other things. They work for me. I don't really need to go and find how to make Fibonacci work for me. Not to say that you couldn't use it to add to your trading. So that's our entry, stop, and final target all in there. And let's now have a look as well at where our first target will be. So 16.72 through to 17.33. Our risk is $50. I always use $50, I say every time, but just to remind you, I'm using $50 on each side because it's an example. I want you guys to obviously trade based on what's relevant for you, what your risk parameters are. We also might not even place these trades, right? You might ignore me and trade something completely different, and you might just watch to get an understanding. So just because I place these trades doesn't mean that you should, and definitely doesn't mean that you should use the same risk as I give in the example. The risk that you use should only ever be what you are comfortable to risk, that is in accordance with your own trade plan. So here we go. We've put in the first target and the second target. We've got a little note here to remind us for next time. That is the first trade, Arbor Realty Trust, to the short side, and that's what we have there. So now let's come back to top and keep looking for new opportunities. In fact, what I'm going to do here, just to shorten this list, I am going to exclude earnings over the next 5 days. That may reduce our list a little bit. Not by much, it looks like, but that's fine. Okay, ACRE, nothing there. Nothing there. Nothing there, and nothing there. The reason for that is because we didn't have the EMA line up with the UFO. Again, if you need help understanding that and what that means, I've done sessions before in the past that are slower and that go through it in more depth. that hopefully give you the context of that and as to why we'd be looking through this quickly now and saying, no, that doesn't count, or yes, that does count. In this case, we haven't had any that have counted in any of the markets we've looked at so far since we've just put on the ABR trade. I'll wait for this to load, see if we have anything there, and we don't. We don't there, we don't there, and we don't there. Again, we don't have the EMA, just get rid of that. We don't have the EMA lining up with our UFOs. So there's no point trading if it doesn't fit our rules. If you are, that's interesting. If you are trading with less strict rules or different rules, then great, you might find opportunities here. But for us at the moment, we don't think we have UFOs on the weekly, which is good. Okay. So we have an opportunity here on the 3-day. That number is 60%. I'm just going to see if we have a different opportunity with a bigger number. Lots of UFOs all in the same place, which is interesting. So the 3-day looks like it's the best one. Now it's quite wide here, but that's fine because we don't have any buyers on the weekly chart, which means we just trail our stop with this one anyway. If we had buyers close by, then that would be a bit more of an issue because they would be in the way. If we've got a wide range between our entry and stop, and then we've got buyers close, then we don't have enough room to even make a one-to-one. But we're fine as long as we have the room. And because we don't have buyers on the left-hand side, we do still theoretically have room right now. So we'll place it. 12.21, in fact, this will be at market. Oh, I've just realized my laptop is not plugged in and it's about to die. Give me 2 seconds, guys, and I'm going to plug that in. I'll be back in a sec. Okay, I'm back. I think, double checking. Yeah, I'm plugged in. I'm good. So where were we? We're going to go in at market because price is already within this UFO. There's no point selling something for cheaper than it already is. It's already at 12.47, so we may as well go in at 12.47 or whatever it ends up being at market. So it's going to be 12.47. Our stop loss will be 13.83. We'll find out our first target in a minute. But our final target is going to be trailing anyway. Okay, let's take a look. AINV. Always pops up asking me if I want to remember stuff, which is obviously pointless for individual trades. Okay, so the entry was whatever it is now, which is 12.47. The stop loss is 13.83. Wide, very wide. That's okay. So we're going to go in at market. Stop loss 13.83. Our profit will be 1-to-1 for the first half. Risk of $50. In that goes. Going again at market, which is 12.47, same stop loss, same risk, and we just won't put a profit target for the second one because it's a trailing stop. So, a little note, 27th of May, T2 trailing, 1 week and 3 days. There we go. So that's the other half of the trade. The first half, the target at 11.06. Okay, let me just check the chat box. I haven't seen anything coming out of the corner of my eye. Still nothing there. Again, let me know, guys. Let me know if there's a particular stock that you want me to look at, a particular concept you want me to explain. You just let me know. So this is Apple Hospitality, right? Not Apple itself, as in the makers of Macs and things. Let's see if we've got that's 1686, so nothing there. Nothing there. And nothing there. Okay. We've got a big list to get through, so let's just go through as quick as we can. We basically want that at market now, don't we? What's in there? Hopefully we'll get to the end of the list by the end of the session. ARCC. So we definitely won't place this trade, whatever it is, because we have buyers very, very close that will get in the way. So we don't want that. So there's no point selling if we have lots of buyers in the way, because they will stop price from getting to where we want it to get to, which is to a decent profit level. When I say they will, they're likely to, right? They are buyers. Buyers push price up most of the time. So if buyers are before our profit target, then we lower the chance of hitting our profit target, which is not great if we want to be trading and hitting profits. So this is still loading, so we'll give that a second. We're unlikely, because of this gap, we're unlikely to get any sellers here, but let's have a look. Didn't think so. Okay, BE, so that's 17.95. Close, but no cigar, as they say. Brilliant. So we have opportunity on the 2-day. 2-day it is then. Double checking, so 17.95, that's within there. So brilliant. Let's place this trade. So this is BE, Bloom Energy. It's also the first 2 letters of Becky, so not that we want to be biased about our decisions. So 1788 is the entry, 2048 is the stop. The target 1 we'll figure out in a minute. Target 2 will be 14.67, which I think will work. Let's double check that actually when we go through on here. So this is BE. Oh, nope. BE. I don't know why that's happening. So let's just draw this in for a second. So this was 20.48 was the stop loss. 17.88 was the entry. Now let's just put this in, which is the final target, 14.67. I think we've just got room. That looks to me visually to be just over 1-to-1, but let's take a look. So, 15, yeah, okay, brilliant. So if we're right on this trade, we won't make very much on it. It will be just over a 1-to-1, but we do have room to take the 1-to-1, so we will place it. So basically the rule being here that if the trade gives us less than 1-to-1, and what I mean by that is that the profit target is closer than 1-to-1 away, then we don't place it. If the final profit target is further than 1-to-1 away, then we do place it. And again, very strict rules on that. We follow the rules, and then that way we don't ever have to think about it. It just is or it isn't, and it's very objective in that way. So this was a 1 week and a 2-day, I believe. And just put that in there. So that was 15.28. Doing good. We placed 3 trades so far, and we're still on B out of this list. So looks like we're going to have lots more to look at. BJ's, BJRI. It's funny as well, isn't it? But 26.47. There we go. Let's have a look. Nothing on those ones. We won't have anything on that one either because the way it's loading. So we do have 26.47. We do have an opportunity here. However, just do very quick maths in my head. So that's 550 roughly. Yeah. So remember we were just saying about the probabilities of hitting things. So 21.35 which is there, would be where our target would be. Same on the 3-day actually as it is on the weekly. Our entry would be here and our stop loss would be here. So we can see visually that the entry to stop is greater than the entry to target. We don't want that, so we don't place it and we move on. Again, you might have different rules, and that's absolutely fine. But for us and our rules, that's not what fits, and therefore we'll move on. This one's quite low priced. So bear in mind with low priced stocks, it's less likely to have institutional interest. Although the percentage number at the top looks good. It looks like the daily, I believe. Just check again. Yeah. Daily has the best one here. We're going to end up bunching these two together, but that should work out. So we're bunching those two together, by the way, because our entry would be, so it's 1 week and 1 day. Our entry would be 5.85. So that's a very, very low price stock, relatively. If we add 10 cents to this, that becomes 6.51, which falls within here. We don't want to be getting out within more sellers. So we'll use this number, 6.77 plus 10 cents is 6.87. Our final target is 3.25. I believe, if my maths in my head are good, that still gives us space. But let's take a look. I don't know why. Okay, I must be hitting something weird on my keyboard. Was it Brookdale Senior Living? I don't think it was it? Yeah, it was Brookdale Senior Living. Okay, great. I'm assuming that this is a, if it's senior living, I'm assuming that that is a retirement home or a care home or something. I once met a guy who owned a bunch of those. He was a wealthy man. Let's have a look. So the entry 5.85, the stop loss 6.87, risk $50. The profit target in this case is going to be 4.83. Yep, which is above the other one, which is great. So 4.83 is our first target. So that goes in there. Same entry, same stop loss, same risk. Profit target for the final one is 3.25. And that goes. So placed 27th of May, 1 week, 1 day. That's it. That's all we need to know. And again, I just draw it on so that we can easily visually see it next time. What happened? Did we win? Did we lose? Where are we on everything? So let's keep going. BW, Babcock and Wilcox. Let's have a look. 7.11. So nothing here. Okay, so we have a UFO on the 2-day that looks like it could work out. Let's see. Great. Let's have a look at the 3-day. Not quite lining up. And the 144 not quite lining up. So back to the 2-day. Our entry is 7.11. Now again, it's a lower priced stock, which normally means there's less institutional interest. But we're having high numbers up here, meaning the UFOs are working more consistently than if we had a lower number. So that's good. And all the while we're hitting those parameters, I don't really have a problem with taking them. So BW, take a look. going to draw on, and it was a 2-day, so we'll change that in a sec. Entry price 7.11 and 8.22. Our final target was 3.69. Okay, so obviously more visually we can see there more than 1-to-1 away, so that's great. 7.11, 8.22, risk of $50. Profit target in the first instance, our safety target, always 1-to-1 away, is at $6 on the dot. Our second target, so again, same entry, same stop loss, same risk, and $3.69 for the final target. A little note on, placed 27th of May, 1 week and 2 days. That's all we need to know. So far we have placed 5 trades, and we've only really been doing it for 20-25 minutes. So this just goes to show, and I will pause here for a second. When we usually do these sessions, I do spend more time going through it because lots of people are new to this and they might not know why we're doing what we're doing, and it might be too fast and overwhelming if they're just watching. And what that means is we might place 3 to 5 trades, perhaps, because we take longer to explain them. But what this just shows is I'm still explaining a little bit. If I weren't to be speaking at all, it'd be even quicker. But we've spent about 20 minutes and we've placed 5 trades. You could be quite quick and get quite a lot of trades out within a short amount of time. And the reason for that is because we have scans that show us where the opportunities are within a range that we want to look at. And once we've clicked on them, we have very clear rules. Oh, Cheesecake Factory. Great. Love Cheesecake Factory. Not that we want to be biased about our trades. We have very clear rules that say, yes, that's a trade, or no, it's not. And that's it. There's no thinking about it. There's no subjectivity. There's no bias. It just is or it isn't. And if it isn't, we don't place the trade. And if it is, we do. And that's it. So let's just go back there. Brilliant. So again, very clear rule here. Let me just check 144 and I'll just explain that very briefly. So on the 1-day chart, we've got an opportunity that says 52.73. That's the probability rate there. On the 3-day chart, we've got an opportunity. It says 52.58. Which one is higher? The daily chart. That's it. That's the one we place. We've got no buyers on the other side, so our second target will be trailing. So we're quick about this, or can be very quick about this, because it's, does it hit the criteria, yes or no? Do we have the EMA, the 9 EMA in this case, the 9-point the 9-point exponential moving average, does it line up with UFOs on the right-hand side, yes or no? Do we have probability down or up? What are we doing? Where are our opposing buyers or sellers? And that's it. Just, does it check this? Yes, move on. Does it check this? No, don't trade. Does it check this? Yes. Does it check this? Yes. Great, trade. That's it. It's very very straightforward. So 39.54 is the stop loss. Our target 1 we'll figure out in a minute. Our target 2 will be trailing because we don't have buyers here. So let's now just go back here to, just put in that target 1 there. I don't think I've ever traded the Cheesecake Factory before. I don't know why I'm a little bit excited about it, because I love the Cheesecake Factory. Again, just on a serious note, we shouldn't be trading things based off of that we like it or not. That's irrelevant. What's relevant is, does the criteria hit our rules? Does the trade meet our rules, that are objective rules that say, if this, then this? Think about it like a logical program on Excel, or if you're an engineer, any form of logic that you use, or software developer. If that, then this. This needs to be something that is as good as programmable, right? So that if you were to say to a robot, if this, then this, it's not going to come to a situation where it doesn't know what to do. And that's what our methodology does. Of course, we execute it as humans. We're using apps and technology to help for a lot of it. We still execute as humans. But what this enables us to do is to be very mechanical and be very robotic so that we're not saying, oh, I like the Cheesecake Factory, let's trade this. We're going, oh, we like the Cheesecake Factory, or we don't, whatever, you might not. Does it also meet our criteria? If it does, then cool, I'll place the trade. If it doesn't, then great, no worries, I'll move on. And we don't have any emotion about it. So placed 27th of May, it was T2 trailing, and it was a 1 week and 1 day. That's our 6th trade of the day. Let's now come back and keep going. What I might do, just to give us a smaller list, because we're not going to get through all of this, let's put 15 and 150. We've got these in here, that's fine. We've excluded earnings in the next 5 days. Got our auto climate on, sensible. Let's have a look at early. Let's see if that helps, gives us a smaller list. It does. So let's look at these. Early meaning it's just started its move to the downside. So it's actually, in theory, not always, of course, but in theory, it's more likely to work out if it's only just started a move to the downside, it's got more room to go based on what usually happens. If it's towards the end of a normal move to the downside, then not so great. So what's that? 66 on the dot. So pretty much where we are now. Nothing there. So you can do this as well, is that you might look at these things and go, that list is way too long. And I don't want to have too many opportunities to take because then I'm going to not know where to allocate my capital. Let's be stricter on the scans, stricter on the criteria so that I have less options available to me if you find having too many options difficult. Now that might sound like a weird thing to say, but let's say you've got $10,000 in the account, $100,000 in the account, $1 million in the account, and you're risking 1% or 2% of your account on each trade. You can't place all of these trades. You can't place 100 different ones. You're going to be risking way too much at once. So in order to find it easier to say, okay, actually there are 4 trades I can place rather than 20. If there are 20, but you can only legitimately place 4 or 5, then you've got to pick based on different criteria now, which ones you trade. That can then be difficult to understand what we're doing. Whereas actually maybe being more strict in your criteria helps to weigh that out. So nothing there. Okay, so 31.32. No buyers. There. EMA is not lining up. Well, that says 0% up there, so I'm happy with that.